Every earnings season, investors ask the same question. How does JPMorgan keep doing this? Different interest rates. Different economic cycles. Different market conditions. Yet somehow, JPMorgan continues to outperform. While many banks struggle with slowing growth, credit concerns, or market uncertainty, JPMorgan seems to find a way to come out ahead, again and again. But here's the real mystery. This isn't just about one exceptional quarter. It's not even about having a legendary CEO. For more than a century, JPMorgan has survived financial panics, recessions, banking crises, and dramatic shifts in the global economy. And somehow, each challenge seems to leave the company even stronger than before. So, is this simply the advantage of being America's biggest bank? Or has JPMorgan built a competitive engine that other financial institutions simply can't replicate? In this video, we'll go beyond the latest earnings report to uncover the real secret behind JPMorgan's endless winning streak, and why understanding that secret may completely change the way you evaluate banks. The latest earnings once again reinforced JPMorgan's reputation as the industry's benchmark. But this winning streak didn't begin this quarter, or even this year. For decades, JPMorgan has consistently generated industry-leading profitability across multiple economic cycles, from financial crises to periods of rapid expansion. That consistency isn't driven by favorable market conditions alone. It reflects a business model built on diversification, disciplined risk management, and the ability to adapt as the financial landscape evolves. To understand why JPMorgan keeps outperforming, we need to look beyond quarterly results and examine the structural advantages that have been compounding for years. At first glance, JPMorgan may look like a traditional commercial bank. But in reality, it operates as a highly diversified financial institution with leadership positions across consumer banking, commercial banking, investment banking, markets, asset management, and wealth management. Each business responds differently to changes in the economy. When one segment slows, another often benefits from shifting market conditions. This diversified earnings engine has helped JPMorgan deliver resilient performance across multiple economic cycles, creating a level of stability that very few global banks have been able to match. The question is no longer whether JPMorgan is diversified. The real question is why this model keeps producing superior results while many competitors struggle. JPMorgan's advantage isn't simply the number of businesses it owns, it's how those businesses reinforce one another. A corporate client may begin with a loan, then use treasury services, issue bonds through the investment bank, manage liquidity with asset management, and eventually work with the firm's wealth advisors. This creates an integrated financial ecosystem where one relationship generates opportunities across multiple business lines. The result is stronger client retention, deeper engagement, and multiple sources of recurring revenue. Rather than competing product by product, JPMorgan competes as a complete financial platform. And this interconnected ecosystem is where its competitive advantage begins to separate from the rest of the industry. History reveals a pattern that has repeated itself for decades. During periods of financial stress, customers and institutions tend to move towards stability. Strong balance sheets, trusted brands, and proven risk management become more valuable when uncertainty rises. JPMorgan has repeatedly benefited from this flight to quality. From the global financial crisis to the regional banking turmoil in 2023, the bank attracted new clients, additional deposits, and broader business opportunities as confidence shifted toward the industry's strongest players. For many banks, a crisis is about survival. For JPMorgan, it has often become a catalyst for expanding its competitive position. In banking, scale is far more than size, it is a competitive advantage. With one of the industry's largest deposit bases, extensive global operations, and deep relationships across consumers, corporations, and governments, JPMorgan operates with a reach that few financial institutions can match. That scale allows the bank to invest billions of dollars each year in technology, cybersecurity, artificial intelligence, and risk management while continuing to enhance customer experience and operational efficiency. Smaller competitors often face a difficult trade-off between investing for the future and protecting profitability. Over time, this creates a widening gap. Scale doesn't just make JPMorgan bigger, it makes it increasingly difficult to compete against. Capital can be raised. Technology can be purchased. Even talented employees can be recruited. But trust is built over decades. JPMorgan has spent generations establishing relationships with households, Fortune 500 companies, institutional investors, and governments around the world. These relationships are reinforced by a long track record of execution, risk management, and financial stability. This creates a powerful economic moat. Clients are not simply choosing a bank, they are choosing a long-term financial partner. And the deeper those relationships become, the more difficult they are for competitors to replace. This is where JPMorgan's greatest advantage begins to emerge, not in what it owns, but in the trust it has earned. A competitive advantage is difficult to sustain without disciplined leadership. Under Jamie Dimon, JPMorgan has consistently prioritized resilience over short-term results, investing through economic downturns while maintaining a strong focus on risk management and capital allocation. Rather than optimizing for the next quarter, the bank has continuously strengthened its technology, expanded its global capabilities, and preserved financial flexibility. This long-term approach has enabled JPMorgan to adapt as the industry evolves without compromising its core strengths. Over time, that discipline has shaped more than just performance, it has built a corporate culture designed to outperform across multiple market cycles. By now, a clear pattern begins to emerge. JPMorgan doesn't rely on a single business, one exceptional leader, or one favorable economic cycle. Its strength comes from a system where scale, diversification, technology, disciplined risk management, and decades of trust reinforce one another. Each advantage becomes stronger because of the others, creating a compounding effect that is difficult for competitors to replicate. This helps explain why JPMorgan has remained the industry leader through recessions, financial crises, and changing interest rate environments. Perhaps the greatest lesson isn't that JPMorgan keeps delivering strong earnings. It's that the company has built an institution designed to keep winning long after any single quarter has passed. The latest earnings may have captured Wall Street's attention, but they are only the latest chapter in a much longer story. JPMorgan's enduring success isn't defined by one strong quarter. It is the result of decades spent building a business with structural advantages that continue to compound over time, an integrated financial ecosystem, unmatched scale, disciplined leadership, and the trust of millions of clients worldwide. For long-term investors, that's the more important takeaway. Quarterly results may fluctuate, but understanding why a company consistently outperforms is often far more valuable than focusing on how much it earned in a single quarter. And perhaps that's the real secret behind JPMorgan's endless winning streak. As always, this video is not financial advice. Please do your own research before making any investment decisions. Thank you for watching. If you found this analysis helpful, don't forget to like, subscribe, and I'll see you in the next equity research.